Okay, just another moment here and we will be getting started with the team. Thank you everyone for your patience. Welcome everybody to the show here today. So this is the Bitcoin Intrinsic Value webinar. This is going to be hosted today by Pierre Rochard. We will be just covering a few housekeeping items. So if you are joining us through Zoom today, you can submit your questions to the panel through the Q&A option. We have the chat turned off just to position everything to that Q&A function. We will be going through this session. It'll be approximately an hour in length. And I'm going to get started now with our lead Bitcoin strategist, Pierre Rochard. Please take it away.
Thanks for the great intro. I'm joined here with Tomas Perfumo, who is our Director of Strategy, and Pete Humiston, our research analyst on the Kraken Intelligence team. And they recently published a really interesting note about what is intrinsic value to begin with, and how does it apply to Bitcoin under different lenses from different asset classes. But first, Tomas and Pete, tell us about Kraken Intelligence and some of the recent pieces y'all have published.
Yeah, thanks, Pierre. So as Pierre mentioned, my name is Tomas Perfumo. I oversee the research effort here at Kraken. As part of the discussion around why we published the Bitcoin Intrinsic Value note, we really wanted to highlight some of the work that we've done here at Kraken Intelligence really over the last year. And so I think it starts with just the formation of the group. One of the things that we realized starting a couple of years ago now, that the space is extremely fragmented from an information perspective. We felt that Kraken was well positioned as an exchange with touch points in most areas of the industry to be a thought leader and really to be in a position to invest in education for the industry. And so we've taken the approach of putting together a large suite of content, which I'm highlighting here on this slide. You can see more of it at that docs and link. And also, if you'd like to sign up for some of our reports in the future, please email us or email us comments or suggestions. But effectively, we've been trying various different forms of content, whether they be asset primers or primers on mining, or even discussions around Bitcoin, the Bitcoin halving, and even network hash rate. We put together also daily pieces, and we think that, again, the theme of education is really important. We try to look for topics that we think are, in some respects, highly contested, where we can weigh in with either data or narratives to provide you all with increased perspective around formulating an opinion for yourself. So I would say that's the genesis. Again, we have a whole suite of material. We share it on the Kraken blog. Please check it out. And I think that's what I would say as far as the introduction of Kraken Intelligence in terms of intrinsic value. And I'll turn it over to Pete to discuss why the topic of intrinsic value specifically.
Yeah, thanks, Tomas. So, the report that we put out entitled "The Great Debate," what is this debate exactly about? And bluntly, it's simply, what is the value that Bitcoin has in and of itself? The properties, the attributes, its utility, and ultimately, kind of at this question resides a deeper question of ultimately what is its intrinsic value. And we wanted to ultimately attack this question because we believe this question of what is intrinsic value is fundamentally at the root of virtually every single asset purchase. It's all things considered, what am I willing to pay today for this particular asset? And so one's own interpretation of the value of owning that said asset ultimately will kind of answer that question for each individual person. And it's this kind of culmination of everyone's perspective of what is intrinsically unique and valuable to this asset that makes you want to own it, that influences its market price. And we can dig into that. But Also, more importantly, we really want to attack this question because it's a topic that is a great debate, and it's something that is still widely unanswered in our industry and the traditional financial world. And we have found that folks on the institutional side of things and even at the retail level can't or are not educated enough to answer this question, and it's deterred their adoption or their investment or their use of this asset class itself. And part of that is because Bitcoin is simply complex. I think anyone who's on this attending this webinar will agree that there's quite a learning curve to Bitcoin. It takes some time to ramp up to it. Another reason why this question is hard for people to answer is because I think in today's day and age, this notion of value and scarcity is changing. And these two things coupled with the innate human tendency to want to avoid changing your opinion and kind of coming around and pivoting, everything combined together makes this a bit of a battleground and tough to come around to. So again, sticking within the theme of education, to Tomas's point, is we really wanted to attack this question head on and come to an answer and be able to provide the public with both perspectives so they can ultimately come to their own conclusion. That said, I know Pierre's got some questions. We'll throw it over to him.
Yeah, it's interesting because to me, intrinsic value, it kind of comes through when people react to Bitcoin by saying that it's just tulips or that it's just beanie babies. And what they're trying to speak to is that they don't have a valuation framework, or if they do, it's just purely as a collectible that is ultimately has no intrinsic value in a sense. But let's dig into it. So what are the different definitions of intrinsic value, and kind of how do people flesh that concept out?
Yeah, sure. So we've got a slide here. This is something we covered in the report. Essentially, we looked at several different kind of definitions of intrinsic value and tried to parse out where the overlap was, because like any kind of philosophical question like this, you ask a few people, you're going to get different answers, but there's a kind of a consensus that you can surface to. So we ultimately found that every definition talks about an asset, this use of perception, intangible properties, value being inherent to the asset, and then this reference of market value. So the Kraken Intelligence team came up with this definition of one's perceived value of an asset when considering its fundamentals, tangible or intangible properties, and this can differ from market value. And beneath this, there are kind of some assumptions that reside, but this is the definition that we kind of came up here with is very encompassing of what's out there and what seems to be consensus. I will say that we do reject this notion that, and you kind of come across it in the crypto world, maybe not so much in the traditional financial world, but we reject this notion that nothing has intrinsic value. I think people say that because intrinsic value is subjective, but we don't see that as a reason to invalidate the attributes and uses that someone sees in something. And certainly people in the traditional financial world would disagree with this because the nature of their business is taking advantage of this discrepancy to generate a profit.
That makes sense. So how can we look at the relationship between the day-to-day trading price, right, the market price, and this notion of intrinsic value, of what people are actually, the fundamental properties of the underlying asset?
Yeah, I'll jump on this one. So we have a pretty interesting, well, it's just a simple graphic, but effectively, as Pete mentioned, intrinsic value is a very individualistic concept in terms of, what I value Bitcoin could be very different than how you value Bitcoin, Pierre, or how Pete does it. And the market is really just a social auctioning system. People are buying and selling, and the price that we're so encaptured by is really just what the last buyer and seller agreed to in order to trade hands. And so, I think the market price and Ben Graham, who's a famed value investor, really put it well many years ago that in the short run, the market's a voting machine, and the long run's a weighing machine. And what that really means to say is that in the short run, people are basically voting on their own personal definitions of intrinsic value by the actions they take in the market. So if that is, a trader who thinks that a technical breakout is important and they want to buy it, and they have a targeted exit, that could be their version of intrinsic value based on the demand they expect. It could also be someone who may be selling to cover an expense for whatever reason. And so their version of intrinsic value is quite different. But that's the kind of beauty of the market, is that it's really just a clearing of these expectations. And the key point on this slide is to highlight that intrinsic value can be different than market value. And the opportunity that we commonly hear, at least from an investor's perspective, is if you believe intrinsic value is higher than the current price, you believe it's an undervalued asset, you buy it. Likewise, if you believe that the intrinsic value is lower than the market price, you believe it's overvalued and you sell it.
That makes sense. And this price discovery process is going on, and some of the market participants are making buy or sell decisions based on technical analysis, right? They're looking at historical prices kind of in a vacuum. And then you have another set that are looking at the fundamentals that we're talking about today, and who have valuation frameworks. And so how can we kind of take valuation frameworks from other asset classes? Because we try to, we think that Bitcoin's something new. Is it something new, or is it is something that we can use existing valuation frameworks for?
I think this is my personal view on how we approach this. So I think what the note did really well, our research note, is to discuss the various methodologies that most people are using for valuing what you'd commonly refer to as like traditional financial instruments, or things that you're just familiar with. Like when you buy a home, what is one of the things you do? Oh, you check out the prices on the neighborhood, right? Like you don't want to be the one that spent 2 times per square foot when your neighbor was half of that, for example. And so we're always dealing with the concept of intrinsic value in our everyday lives and our decisions, whether it's purchasing or investing. And so the note does a lot of coverage in terms of trying to frame intrinsic value in the context of bonds, stocks, real estate, alternative investments. My personal view is that Bitcoin falls into more of a commodity-like instrument. And so with commodities, you have a more difficult discussion in the sense that the intrinsic value is usually derived from the utility of an asset, and whatever that utility might be for you is different. It could be a store of value, or it could be a payment mechanism or transfer, what have you. But the point is that with a commodity, it's really a game of clearing market demand and market supply. And so there isn't some concept of yield just by owning Bitcoin, for example, that you would otherwise have on a stock or a bond. So I personally view it more like a commodity-like instrument, where the value is just marginal demand and marginal supply, where demand is influenced by factors of utility, whatever they might be. Peter.
Yeah, in the note, Pete, you mentioned that historically Bitcoin has occasionally had what we could liken to cash flows with these forks or airdrops or what have you. And could you speak to how that has some similarity to stocks, but some differences too?
Yeah, definitely. So, in the words of Warren Buffett, in order to calculate intrinsic value, you are taking the cash flows that you expect to generate in the future, and you're bringing them back to present value. So you're valuing this asset based off the expectation of what you're going to receive. And this is the same for stocks and bonds. So the methodology for doing this is, discounting those cash flows, or discounting those dividends, or those coupon payments to present value. And so, we kind of see this idea of stream of value, or, we try to make it similar. We try to draw the analogy to cash flow by owning a stock or a bond. And basically what we say here is, and we think that the argument can be made, is that, one of the most unique properties to Bitcoin is its open source code. The fact that by owning this asset, or this asset existing in space, all different kinds of projects can spin out of it. And that's certainly something that we've seen many times over the past decade or so. So, we want to make the argument that while traditional folks will say, hey, this thing doesn't generate a stream of value, we're going to push back and actually say, that isn't necessarily true. You're forgetting the most fundamental property, this ability that it's open source and can be forked. And thus, by owning a Bitcoin, you are entitled to not just a proportionate share of those forked coins, but all kind of value that stems and deviates off of Bitcoin. And, with Bitcoin being the biggest, most decentralized behemoth in the space, and presumably until proven otherwise, into perpetuity, owning this asset class really does kind of entitle you to this stream of value. So what we wanted to do is we want to take just a step back and say, all right, we know there's 105 hard forks to date. Let's hypothetically, look at a few different scenarios. And so we came up with 4 different scenarios with respect to owning a Bitcoin, and then how would your portfolio change in terms of the Bitcoin Cash hard fork, the Bitcoin Diamond, Bitcoin Gold, Bitcoin Private, and Bitcoin SV hard forks. And as what you'll see here is that if I owned 1 Bitcoin, I would just merely collect $10,225. If I owned 1 Bitcoin and collected on those coins, I would get almost $10,600. So I'd generate about a 4% yield. If I had sold all my coins after owning them for 30 days, including still owning Bitcoin, I would have a portfolio of about $11,000, so close to an 8% yield. Now the kicker here is if I owned my Bitcoin, I'd sold those coins after 30 days and then reinvested them back into Bitcoin, I'd have a portfolio of almost $12,500, so a 21% yield. So again, it's this idea that we don't know what's going to come out of Bitcoin, where it's going to go, but by owning Bitcoin, you do have this access to this flow of innovation and value that is going to spin off of it at some point in time.
Yeah, if I can add really quickly, there's a couple points here on the concept of cash flows and producing assets. One concept that I've toyed around with personally is, if you believe that this is an asset that over time will grow in value, you can actually create your own dividends. And the fact that you could sell parts of your Bitcoin holdings over a year, this is a common retirement concept in terms of having a nest egg and then drawing off of it into your retirement. But ultimately speaking, with respect to this stream of innovation, just one analogy that I like to make is, I bet you 100 years ago, lithium was just a dull rock that no one really cared about. But with the advent of smartphones, battery storage requirements for consumer devices or vehicles and utility needs, it's got value. And so we see a similar play with commodities, that to the extent that you're holding a commodity that where newfound applications are being drawn on, you might be able to actually generate a superior value stream out of it.
And to that point, we've mentioned the different kind of value investor views of doing a discounted cash flow. And you mentioned that, okay, but you could just sell your principal or parts of your principal as a cash flow. And there's kind of a similar trend on corporate balance sheets where more and more of the asset, quote unquote, is kind of the intangibles. Whether it's intellectual property or goodwill, et cetera, the brand. And so this concept of, okay, we're going to buy this asset because, the balance sheet has this margin of safety where there's a lot of tangible assets that we could liquidate in a downside scenario. We can also draw that metaphor or that analysis to Bitcoin, right? Where it does have all of these intangibles that are accruing with time, where we don't see them as cash flows, but they're happening. Do you want to speak to that?
Yeah, I'll jump in on this. So my background is in equities, and particularly from like a valuation perspective. And I actually tend to be a little bit traditionalist in terms of sticking to like a value investing ideology. I think, and I won't go into a diatribe on this, but I think one of the problems with value investing is that traditionally it's defined around this concept of paying low relative prices for an asset. And that's defined in an accounting sense. So I take the price divided by the earnings, and if it's below some number, I would call that a value play. The difficult part with value investing is that it was probably one of the first iterations of real formal securities analysis. And you're basing it off accounting metrics that are fairly dated. Like we're talking about systems that have been written, but also slightly evolved over time over the last century. And so I think over the last 20 years, the economy has shifted from being, and not just 20 years, but even longer than that. The economy is not really a manufacturing driven one, not at least in a lot of developed nations. We're really a services one. So the fact that the internet wasn't a thing 30, 40 years ago, but now is probably one of the biggest value drivers in the US as an example, means that you really have to think about the accounting of value. And so intangibles is not something that's really accounted for well within the valuation space on securities. And so what a lot of value investors have been driven to, because of sticking to a rigid formula in many cases, is they end up owning like melting ice cubes, like defunct oil companies or distressed names. And there are opportunities there, but it's a smaller field, precisely because you can't value, what Amazon reviews did for the Amazon platform. As far as allowing people to make better purchasing decisions and deciding to use Amazon simply because they have a review system that's enormous and that's a huge asset to them. But that's not expressed in the financials. And so I think what we're seeing is over time, or what we believe is this demographic shift towards the understanding of intangible value and digital value as an asset, with people embracing that as part of their livelihood and understanding that the concept of value. And so I think the accounting side is where we're going to see a catch up over the next couple of decades, as we start to really bring that formally into the calculus.
Yeah, I would also say, just adding on to that, it's folks will derive intrinsic value through these financial multiples that are accounting based. And again, it sometimes can be of value and use, but at other times it can't be. And part of that is because simply there's just no one size fits all approach for using these multiples. And oftentimes, Tomas alluded to this, with the passing of time, you kind of have to change your approach and the method by which you're valuing things. And this is where frankly, folks have completely missed the boat on some of the most profitable generating business that we've seen over the past couple of decades. They have failed to account for these intangible properties and really kind of think about what is value in this information age. A great example is Facebook, right? And again, I'm picking on Warren Buffett because he's the famed investor and because he's also thrown a lot of flack at Bitcoin. But he came out and said I was flat out wrong on Facebook and Amazon. But if he had done the work, if maybe you were a Peter Thiel or whatnot, and you'd looked under the hood and said, Facebook is sitting on top of what it could be a massive network, and these network effects. There's just an incredible amount of value that you can extract from it. But of course, this is a new age notion and thing. So valuing that was very tough, let alone identifying it. So we made the case in this report that folks are neglecting a lot of the intangible properties of Bitcoin that make it unique, that derive a ton of value from it. And these are things including the computational and cryptographic security, its ability to be, it's verifiable, it's immutable, censorship resistant, and then there's also this other kind of like element of reflexivity. All these attributes you can't account for like you could for other assets in the past, but these are real value propositions that sit with Bitcoin that make it unique and stand out.
So I agree, and I guess the rebuttal to that is, okay, if that's true, why is Bitcoin not at $1 million, right? Why? And also on the day it was released, arguably it had some of these properties. So why do we see this kind of cyclical value accrual?
Yeah, so I know that you'd be thrilled to see Bitcoin at $1 million, Pierre. But candidly, like the number is arbitrary, right? Like the fact that we're even at 10,000, Bitcoin's already the best performing asset class in the decade. And so, to some extent, it's already achieved that level of notoriety, and it's earned that place as far as having generated value out of thin air, literally thin air. And the capital investment of probably a handful of people, back in 08, 09. And so I think it's really interesting to start with that in context. But as far as the cyclicality of price and whatnot, like this again it really boils down to that concept of intrinsic value and the how it plays out in the market price. So you have plenty of people who were involved in Bitcoin back in 2010 who thought that it would only ever be worth $1. And so they used it for whatever payments they wanted to make back then. You had the whole Bitcoin pizza discussion that's still notorious. People were trading it all the way back then as well on forums. And the reality is that could have been very well, the discounted intrinsic value of Bitcoin at that point in time, based on the amount of risk, the amount of adoption, whatnot. And so I think what's important to note here is that as the network has matured over time across all the fundamentals, whether that's activity, value transferred, mining activity, et cetera, it's all been up and to the right. You have this chart on Bitcoin subscribers on the Reddit subreddit crossing over 1 million. And so, even in traditional financial assets, intrinsic value can grow over time. And it's just a matter of how much discount do you have to apply because of the risk, and what is the potential upside? And so, I think we're still probably early days as far as Bitcoin, and in terms of how addressable it is for the global, for the world, frankly, for individuals. The number of people holding Bitcoin is still a very small percentage of the overall population, and the use cases are pretty undefined as far as how far you can really take it. So I would say that it's really just a game of time and maturity or maturation. I don't know what the end state is, 500,000, 15,000, 1 million, who knows? But I would say it came a long way. It's going to take some time and maturation. And, I think more recently, we've probably been at 10,000 for the longest time in its history. So this is like a step forward.
So do you think that we're at saturation of adoption, right? That what kind of time frame should we look at to make a determination of, hey, look, adoption has peaked. Like we got to find something else, another angle.
Yeah, I'll just comment on this briefly. So we put this together from our Great Wealth Transfer note several months ago, and this is a chart on adoption cycles to saturation. I'd note a couple things here that I think are important. You've seen a lot of the biggest innovations take place over shorter periods of time. So things like the internet took 23 years, but social media took 14, podcasting took 9, right? And it looks like running water took 99. So, conceptually, I remember when I joined the industry professionally a few years ago, one of the other companies I had been interested in was nuclear energy. But their timeframes were, oh, this is going to be adopted over 30 years. And in my head, I was like, oh my God, I'm going to be gray haired by the time it's picking up. You're making a bet on your entire life, basically. But with Bitcoin, what's unique is that because it's built on, the backbone of the internet, which is already a highly adopted network, it really does, I think, transcend some of these, some of the limitations around infrastructure building that's required for people to just join the network. And so today, with as simple of a internet connection, you can have a hardware wallet, a paper wallet, whatever wallet you want, and you can accept or send Bitcoin as long as you got that internet connection. It's cheap and it's mostly accessible for a large population on the planet. So I think really the only frustrating factor as far as the speed on this adoption cycle is going to be the fact that Bitcoin is open source. It's highly contested. It's highly adversarial. And so you don't have that same level of, investment where you had like social media giants really, working hard and competing against each other on a singular mission of we're trying to connect people. Bitcoin has got 1 million missions. And so I think if I had to guess, I would say that it's probably going to be less than what it took the internet to gain traction and saturation. But because of its open source nature and sort of multifaceted utility, I think it'll take a little bit longer than perhaps tablets or podcasting.
Yeah, I would say the same thing. I mean, echo the same points. It's you know, the newer age tech that's really rose to prominence in faster period of time has been able to do so because of this infrastructure, the, you know, i.e. the internet that it's built on top of, and that's really accelerated things, and it allows for these network effects to rise to prominence even faster than we've seen historically. And just to really drive home the point of, you know, the value behind a network effect, Silicon Valley seed investment fund NFX, they put together a pretty interesting stat. I'm sure there's some room for debate, but you know, they made the claim that essentially 70% of the value created in tech since 1993 has been, you know, driven by network effects. And I know, you know, prominent VCs like Peter Thiel, he'll say that if you want to have a monopoly, you know, part of it is finding that network effect. Those are just way too powerful to reverse when they've picked up course. And so what you'll see here too is, you know, maybe there's some room for debate here, right? Because of what constitutes a single wallet. You know, it's easy for an organization to have multiple, or for an individual to have multiple, but you can see here the trend to date has been eerily similar, which seems to suggest that, like, you know, the internet, you know, Bitcoin is very well on its path to its own kind of network effect, if you will.
That makes sense. And so it looks like here, you know, 10 years in now, 30 years for the internet, and frankly, for the applications built up on top of the internet, right? Of the Amazons. I think Amazon was founded in the early 90s. At this point now, I think the top 5 corporations are all tech companies. So just astounding long-term value creation, and with a speculative mania in it, right? Of that 2000s tech bubble, which is also interesting to draw a parallel to.
Yeah, absolutely. Yeah.
Okay, so let's shift gears from equities to real estate. Because I've also heard people compare Bitcoin to real estate in terms of the scarcity, right? There's only going to be so much land in the world, but also that it really feels like you own a piece of digital property, and I'd be interested to see what the valuation metrics are and how they might map onto Bitcoin.
Yeah, Pete, you want to handle this one?
Yeah, sure. So looking at real estate, I mean, there's a few different ways that you can derive the intrinsic value. One of them is looking at comparable sales. That's simply just the price paid for surrounding homes or buildings. The other is taking some sort of capitalization rate, which is just the rate of return used to discount those cash flows and arrive at a present value as of today. And then there's this replacement cost, or maybe it's, you know, perhaps synonymous with cost of production. And this is the cost that one would have to incur to reconstruct the property, which also includes depreciation. So there are a few problems with these methodologies. I mean, they seem very straightforward, but there's a lot of information asymmetry. You know, there's major changes that are impacting the market that are hard to account for, like a credit crisis or just even a real estate boom. And so for these reasons, you know, we kind of wanted to focus on this replacement cost. And we see this as almost kind of like a baseline approach to valuing the intrinsic value of a property. And the others are, you know, presumably supplemental. And so that replacement cost makes for kind of a really good starting point. So we wanted to take the similar approach with Bitcoin and essentially say, hey, you know, like real estate, I can either buy or build something. With Bitcoin, I can either buy it or I can use my time, energy, and capital to propose blocks in the network, essentially mine it, right? And so the overlap between these two is essentially that market participants are taking into consideration their time, their energy, the money that is required to acquire that asset, and then that decision, based off of how those factors pan out, will have some sort of influence on the market value. The derived intrinsic value that they come up with for this particular asset will have an impact on the market value. And so we put together kind of a quick little example, and obviously I think there's a lot more variables at play here, but as you'll be able to see on the screen here, the difference between acquiring a stable supply of electricity at 11 cents per kilowatt hour as opposed to 12 cents can make all the difference for someone opting to either mine it or to buy it. And if I'm opting to mine it, this is akin to saying, hey, I don't have the time, the resources to acquire a similar piece of real estate on the open market. So that's not my path. I guess one thing I did want to touch on, because I think that some of the pushback that you would run into with this argument is a lot of folks will bring up the Marxist labor theory of value. And they'll essentially say, economic value of a good or service is determined by the total amount of labor to produce it. But then they'll say, hey, just because work is put into something doesn't grant it value. The caveat here, and I think most people forget, and you kind of fall into a debate of semantics, and this is also why we really wanted to define intrinsic value at the start of this, is because economic value is actually, it's not intrinsic value, it's not market value, it's the most that a person or a company is willing to pay for a product or service. So the fact that that work needs to be put into something, folks will say that doesn't give it value. Well, that pertains to economic value. And again, at the end of the day, I've got two options. If this is an asset I see of value and of interest, I can either put the time and energy into it, or I can simply purchase it.
Right. And it's just like when we were talking about the market price for Bitcoin, oscillating around that intrinsic value. We also see cycles in the mining sector, in the Bitcoin mining sector, where mining profitability is oscillating around the price, which is oscillating around the intrinsic value. So I think it causes that pendulum to swing. Now, one of the events that really got hyped up this year was the halving, right? And presumably the halving would cut revenue in half, right? If we kind of exclude the transaction fees and we exclude the price, the Bitcoin price changing. But do you want to speak to that? And do you think that there's kind of an effect from that angle?
Yeah, I think this is my personal view, but I think the halving is almost always priced in. Like it's one of the least uncertain events in crypto and Bitcoin because you can see it coming a mile away. It happens roughly every 4 years, and you could probably estimate it to the day pretty well, or with pretty decent accuracy. And as far as marginal price is concerned, like I'm talking about the price in the market and trading and whatnot, I think that's where expectations really drive action. And so to the extent that there's issues with a halving event, which I can't really come up with any good reasons for that, other than like a minor boycott or something strange. I would expect that to drive the gyration. I think, the fact that intrinsic value in the context of the halving, it derives from the fact that all of us on this webinar, on this who are attending here, have this understanding that there's 21 million Bitcoin. Why is that the case? Well, it's because of the halving, just by construct of how supply is introduced. And so, in that sense, the halving is priced into intrinsic value, and what the trajectory of price is really more around the uncertainty. And so I think one example of a great uncertain event that caused a lot of consternation was the Bitcoin Cash fork back in 2017, where people really didn't know what was going to happen. People were worried, oh, it's like half the hash rate going to fall off. And what does that mean for producing blocks? Are we going to have like a chain death? And so that created a ton of volatility into the event and then on the day of the event. And so I think those are what you see play out in the market price, but intrinsic value is a little bit, more hidden. And I think the fact that we ascribe any value to Bitcoin as a scarce asset has already been valued, or is being valued today, just in how we approach it.
So that's on the top line part of kind of the miner revenue. And then in terms of costs, we've seen huge advances in ASICs, right? In the efficiency of these machines. Now with Bitcoin, we've got the difficulty adjustment too. We don't just have the halvings. Do you want to speak to the difficulty adjustment and how it might relate to what we're looking at here with the cost of replacement?
Yeah, this is a good point, and I forgot to bring it back to mining. But so I'll speak in like at a meta level only because I'm not like actively speaking to the mining industry every day. But there's a mining in general is probably one of the toughest businesses that exist. Why? It's extremely high fixed cost. We're talking about purchasing a lot of equipment, which depreciates as high fixed cost. You have many of the top miners. In order to be a top miner, you really have to secure low cost electricity. To secure low cost electricity means you have to commit to taking and using a certain amount of electricity with your utility provider. So that means I'm literally committing to, I'm going to consume this much energy. I'm going to pay you this much every month. So there's a ton of fixed cost in the business. And the problem with mining is that with fixed cost businesses, the best case scenario is that you're a monopoly because you ride up all the upside and your cost base doesn't change much. With Bitcoin, Bitcoin mining, it's really a commodity service, if you will. Anyone can mine. Of course, you'll have an advantage based on the equipment you use and the electrical or where you are and your electricity rates, but it's largely a commoditized service. And so, I think with respect to that fixed cost concept, the fact that people are putting that kind of money to work in investment really lends itself to the level of confidence that despite the uncertainty around difficulty and price, which drive your overall top line, they believe that the cost of acquiring Bitcoin is more advantageous to mine it rather than to buy it in the market, because otherwise, why would you be in the business of mining it? And further, they believe that the value of Bitcoin is up and to the right over time. And in particular, it has to outpace the growth in difficulty, which is a direct cost for you.
So after you've extracted this resource, right, after you've mined your Bitcoin or you've acquired them in the market, what's the utility of it, right? And that's kind of the next question in terms of intrinsic value. Is that okay? We've kind of got this. It's kind of circular, right, between the market price, the mining cost of mining. But what kind of utility can people get from owning Bitcoin or the Bitcoin system in general?
Yeah, it's a good question. It circles back to looking at the intrinsic value of commodities. Folks will say a commodity's value is based off of its history of its use and its value among societies and cultures, and ultimately what they can do with it. And then you'll have folks who will use the same kind of ideology and framework and slap it onto Bitcoin and say, well, I can't do anything with it. It sits in bits and bytes. And again, this circles back to this whole idea that people who throw this argument out are, either one, not too knowledgeable of what Bitcoin is, or two, they haven't opened their eyes to this idea of digital scarcity and digital utility. It's something that is kind of foreign to them. So we decided to, we want to make the argument that Bitcoin is, in a sense, a commodity with respect to some of these services, these payment services and value transfer services that exist out there that just seem to be springing up nonstop. So, we look at the payments world, which is, McKinsey estimates it to be payments industry to generate a revenue of around $2.7 trillion in 2023. So a massive market, right? You see players coming to the space like PayPal and Square and Apple Pay. There's really no shortage to transact. However, all these services do rely on a third party to be trusted. But they're, in a sense too, they're just competing on the end user also happening to have the same payment system that you want. If I owe rent for my roommate or whatever it might be, I'm pretty indifferent to Venmo or to Apple Pay, et cetera. It's really coming down to, do they have the same kind of service that I have? So what that does for Bitcoin, it puts in an interesting situation to participate in this realm, but also the unique properties of Bitcoin It's decentralized and open source in nature. It means that anyone in the world, again, with an internet connection, can join and use this service. And regardless of your race, creed, color, your geography, or even the nature of your business, you can send and transact value anywhere around the world. And so that means that not only does Bitcoin's intrinsic value come from its ability to dive into this competitive world of all these commoditized services, but also to reach out to this segment of society that has been shut out by these services. And you can kind of make the same parallels to traditional and offshore banking and remittance services, which again are super, they're not anywhere close to being as frictionless as Bitcoin. They rely on a third party entity to help facilitate that. The transactions are expensive, and it can take weeks, frankly, for things to clear. And a great example is just back in June, right? We saw someone transfer $1 billion worth of Bitcoin in less than 10 minutes at a 48-cent fee. Relied on no one, was done at any, it could have been done at any point in time. It was damn near instantaneous. And if someone wanted to do that in the traditional payment rails, you're looking to pay a 7% fee on average. So you're going to be paying $70 million. And not only that, it's going to take maybe a couple of weeks to clear. So we looked at Bitcoin and said it's got all these different types of utilities and services and ways to use it and transact in a digital sphere that grants it intrinsic value much of the same way that a commodity does, like gold or oil rather. Where it's got a function and a use in present day society.
Pierre, was this your transaction?
I wish. I was sending it to my friend Michael Saylor. This really speaks to one of the questions from our audience from Koi of how does the intrinsic value of fiat currency and payments compare with that of Bitcoin? And you mentioned on the payment side, kind of the censorship resistance, the global nature of it, and sometimes the fees are competitive. And now the other part of that is not having to trust the issuer of it, right? Of having to that digital scarcity. So that was a great question, Koi. And from Richard, this is kind of going off the beaten path here, but I want to answer his question before we run out of time. Square has invested $50 million in Bitcoin. This just came out this morning. Breaking news. We break news on our webinars here at Kraken, and they're going to hold these Bitcoin on their balance sheet. So, Pete, Tomas, does this further solidify Bitcoin's intrinsic value as more and more financial institutions and corporations continue to discover and adopt this new asset class?
Yeah, I would say that it certainly changes, I think, some of the expectations. Even in the last couple of months, the concept of having corporates hold onto Bitcoin as an asset on their balance sheet is something that I don't think many people thought was possible or an interesting play even 6 months ago. So it does play into the calculus of just another sort of use case that certain category of participants want to have with Bitcoin, and in particular in this case as a treasury asset for corporates. I would say a couple comments here. I was pretty shocked by the news. Not to say that Jack Dorsey hasn't been incredibly supportive of the network, but just surprised that he did it with one of his public vehicles. I think a traditional corporate governance expert would say, I don't need Square to buy it for me. I could go buy it myself. And Square should focus on, its own investment opportunities and deploy that capital to that advantage. But I do think Square in particular, and I think it's important to note that this wasn't Twitter. Twitter is a little bit more contested, I think. But Square has a natural interest in the crypto market as not only a player via their app and having people onboarded onto the crypto space. They also help with the open source development by funding it. And I think if I had to guess, they were an early innovator in terms of merchant acceptance, but they've always run on the existing and legacy financial rails. And if I had to guess, there's probably some level of vision here where, they've been able to grow this business very well, but it's been probably hindered to some extent by the use of legacy financial system, where they alone cannot build, an entirely replace that system for their advantage. And I think they might see Bitcoin network as something of a bet, right? Like in the future, if this becomes like really a protocol layer for value transfer, they want to be involved. And so I think this investment for them, again, keeps them really interested in, and I think even culturally, it tends to push people even on the management team who might not be, who are not Jack Dorsey, to say, okay, we hold 50 million of Bitcoin, we should probably keep an eye on it. And what we can do with it from a service perspective. So it's a small investment for now. One other thing I'll note is that Jack has controlling vote in Square. That is, in my opinion, very influential on whether corporates are going to make moves on this. So the early adopters are going to be ones where founders, CEOs have a large voting interest, in my opinion. But this is something that a lot of companies are going to start at least talking about, which is an important discussion.
And I saw that it's 1% of their cash that they put in $50 million. So there's a lot of corporates with a lot of cash on their balance sheets right now.
I would also note that, beyond their investment as a treasury asset, to my knowledge, Square has been custodying a lot of the Bitcoin either directly or indirectly with a third party. So they're familiar with handling probably quite a bit of Bitcoin, just in a different manner this time. They've historically probably had maybe 1 million or 2 million of inventory based on my understanding of their financials, just for the purpose of their Square Cash App.
Now, another big adoption catalyst has been Kraken's SPDI application being approved, but also the OCC news that we came out. So on the financial institutions side, it does seem like regulators are warming up to the idea of having traditional banks holding Bitcoin and other digital assets for their clients, which kind of speaks to that trend. Okay, so let's go next to the issue of volatility, right? Because this is where I think that when people say Bitcoin has no intrinsic value, part of the reason they say that is because it's so volatile, right? So something that has intrinsic value in their worldview should not be volatile because the market price should converge onto that intrinsic value. And it's also kind of related to the correlations conversation, but I guess we can stay focused on volatility and what your thoughts are there.
I'll take this on really quickly. I think volatility has a really, really negative connotation to it. So I took classes, actually futures and options class, with one of the co-inventors of the VIX many years ago. And I don't think he views volatility negatively, right? Like there's this view that volatility means bad or downside. Volatility is just a statistical measure of how variable a price is or an indicator is. And so to the extent that you have an asset that you think has high potential, it's entirely natural for it to have high volatility. In fact, for anyone who's on this attending, who owns an option on a stock, perhaps like one of the weekly call options or something like that, you want that stock to move and move fast. So I think volatility has been misconstrued, in my opinion, to be just one form of a negative. But the fact that volatility is so high for Bitcoin means it can go from $1 to $10,000 in the span of 10 years. I think what's interesting about Bitcoin and volatility is that the supply mechanism for introduction is this, and I think Novogratz put it really well, the supply response. He coined that term, I think, a few years ago, and I really like it. This isn't an asset where, a price crosses a certain threshold and all of a sudden, you have a bunch of people who had maybe a mining reserve that they just kept offline, that they suddenly spin up and start mining the commodity again and bring it to market. This is one where the Bitcoin supply grows on a fixed manner, and it's going to culminate into a fixed supply of only 21 million coins. It doesn't matter if the price is skyrocketing or if 1 million people are buying it tomorrow or today, whatever. So I think Bitcoin is more, you could say, vulnerable to volatile moves because the supply response is highly unique versus what we're used to in terms of commodity clearing. But I want to just come back to and reiterate, like, volatility isn't always a negative concept. And I think over time, and we've even shown this in this chart, that the volatility over time has been coming down. I know that there's a lot of spikes in this chart, but the trend is downwards over time as the network value has grown.
Yeah, Tomas summarized it really well. And I think that the tailwind that volatility has really provided for Bitcoin just speaks to how, virtually almost every single aspect of Bitcoin just kind of goes against the grain, and it really makes you kind of question the status quo. And so folks who will take kind of a fiat currency intrinsic value approach and try and apply it to Bitcoin, they'll say, well, it's too volatile. Well, in this case, the volatility has been great for it. It's led to its prominence, and again, as Tomas said, it's something that is trending downwards and presumably going to eventually normalize in line with maybe something like the S&P 500 in a decade or two's time, as it matures, as it really grows out, as it goes beyond just being a $200 billion asset class, which is still, I always have to take a step back sometimes and remind myself how we are still in the early innings and just how small this asset class is in the grand scheme of things, and with respect to the markets that it's charging after.
All right.
If I could just add one more quick comment on this one. So one of the interesting things about volatility, in my opinion, is that it tends to come down when you have more information, more participants in the market itself. It creates more liquidity and therefore less volatility. I had a funny conversation only a month or two ago with a former manager of mine, actually, who's in the investment management space, and he looks at MicroStrategy. And so, he's a traditional, more value kind of guy. And so he's asking me questions about Bitcoin because all of a sudden one of his investments now holds a pretty large stake of its balance sheet in Bitcoin. So one of the interesting things that is happening, in my opinion, is going to happen based on Square and MicroStrategy and perhaps others that come in. It really forces people to go in and start getting smart on this and start to understand it. And to the extent that that knowledge spreads, and whether or not it leads to someone being involved in the space, it creates that opportunity. And so I think that naturally over time is going to help reduce some of the volatility.
And it's interesting too when we see that if in the order book, if we've got less slippage, that's going to actually attract bigger buyers, right? Because now they are more comfortable with Bitcoin's liquidity, and there's a reflexivity there as well that we might be seeing with these large buyers.
Yeah, it's extremely silly, the whole buy higher mentality, but I can tell you, I worked on a few books that were several $100 million, and just the time and energy to spend. If we were to look at a $10 million company, but we didn't want to own more than 10% of it, there's no way we would put an investment dollar into it because we couldn't scale that investment for our time and energy. So when you think about people who are managing billions of dollars and they're looking at Bitcoin when it was a $500 million network, of course, they're like, no, this is too small for me. But as the value grows, as it becomes more prominent, as it has more utility and demand for it, it actually feeds on itself in that reflexive nature.
All right, our last question, I think, is a bombshell question, an inflammatory one, a controversial one. Serban asks, Facebook was not the first social platform. Google was not the first search engine, etc. How big is the danger that Bitcoin will fall in the shade of another blockchain/crypto coin that has potential for similar intrinsic value or maybe even more?
Yeah, that's a really interesting question. I think what I would probably say, this is my own view here, is well, one, I almost hope it happens, right? Because I think competition in the crypto industry is extremely good because we're competing over innovation. So I'll start with that. I work in this industry. I really want it to grow. So to the extent that there are others who are trying to build off of Bitcoin, make it better, and frankly, that could be innovation that even Bitcoin adopts over time to the extent that it's useful. So it really compounds, I think, the value for the industry, just that intense competition. But I think what Bitcoin has that's really unique is that network value that is sort of, people call it like an immaculate conception, right? Like it came out of a pseudo-anonymous person or persons who we haven't heard from in a long time. So the whole like apolitical view around it, like we don't have a single person to filter our opinions through. We have millions of people who are transacting on it or who hold it. And that's extremely hard to replicate. You can't really create that kind of coordinated effect organically without a lot of luck. And I think Bitcoin had probably a lot of luck in its history over time. And so, with respect to forks, for example, because I think this is a good measurable way to think about it. Why do these forks exist? Well, because they want to leverage the fact that Bitcoin has an existing network. It's almost like handing out, a prize to your competitor's entire customer base. Imagine like, we know our competitor's entire customer list and we go and email them and give them a prize so they can come on our platform. That's, a reflection of the superior value of the network that Bitcoin has already grown and achieved and locked in. And so I think the difficulty with Facebook or Google is that they were really building at a time from scratch where that ability to create a network was I think in my opinion possible with a really dominant technology or offering. With Bitcoin and cryptocurrencies in general, that network is really embedded in that value proposition from the get-go, and it's harder to do organically like Google or Facebook did.
Yeah, I guess the two things I would just add is, to get to, and Tomas has kind of alluded to this, to get to this critical point that Bitcoin is at right now, is almost going to be incredibly difficult, if not impossible, for a competitor. I think you can make that argument just because the cat is out of the bag now. The industry's got eyes front and center all over it. There's a huge amount of interest dedicated towards Bitcoin and towards protecting it. And that leads to, my second thought here is that we've seen some of these contentious forks. We've just seen how resilient and committed and loyal participants have been to Bitcoin in some of its most contentious times. And the fact that people are willing to, ride this thing to zero, let alone stick on top of the protocol, irrespective of what inefficiencies it has at the time or may have indefinitely. It just speaks to the resilience and the power it has to be where it is and to perhaps become the biggest in the industry.
Well, that's a great place to end today. And the Bitcoin price is pumping now. So we've done our job, gentlemen. Where can viewers continue with the conversation and get updates as markets evolve?
Yeah, I would say that one of the things that Kraken has done, at least from a research angle, is we've been investing in, again, many different forms of content. One of the I think, in my opinion, the best forms of content that we've been producing has been a newsletter that we put together daily. So please, if you'd like to be on it, email subscribe to this handle, intel@kraken.com. Otherwise, we're going to be publishing occasionally some of these deep dive reports. We also put out a monthly report on Bitcoin within the context of traditional markets called the Volatility Report. So feel free to navigate to the Kraken blog where we post those as well.
Perfect. Tomas, Pete, thanks for joining us today on this excellent webinar about Bitcoin's intrinsic value. I learned a lot. I hope our audience learned a lot as well. It's an excellent report. So go and read the full report. There's a lot we didn't cover in 1 hour. It's a fascinating dive. And then the other report that I think is also fascinating from a demographics point of view is the intergenerational wealth transfer report that Kraken put together, kind of showing how demographics might drive Bitcoin's price and value going forward. All right, thanks. And everyone have a fantastic day, and may the Bitcoin price continue pumping.
Thanks, Pierre. Thanks everyone for attending.